This is a call to order of a special meeting of the Personnel, Pension, and Insurance Committee of the Metropolitan District. It's a special meeting Wednesday, September 18th, 2024. I understand, after having a conversation with the clerk, that we do not have a quorum. Is that correct?
That's correct. We're one short. I see a couple phone numbers on there. Just want to make sure Commissioner Desai or Stuber or Wolf, have you called it on a phone line? So we're one short, but we're expecting 3 more to attend in some fashion. So hopefully we'll get
Okay.
one more.
Well, do we have public comments relative to agenda items? Once again, do we have public comments relative to agenda items? There being none, we would normally move to item 3, but we don't have a quorum, so we cannot take any action. Moving to item 4, there is going to be a brief presentation by our insurance people, and I believe we can go ahead and commence that. So we can begin.
All right. Good afternoon, everyone. Can you hear me okay?
Yes.
Great. So what we'd like to do today is, this is your insurance renewal. This is what we call your worst-case scenario. We will still attempt to go back to carriers and get better pricing and see if that happens. But we just want to let you know right now that this is where we are today. We're going to talk about premium results and the marketing of the policies. So this is a, can everyone read that? Yep, you can? Okay. So these are basically all the lines that we went out to market on. Back in the June, July timeframe, we had a meeting with Bob, Diana, and Neff, and we talked about strategy, what lines we would market, et cetera, and the approaches we were going to take. The first line here is the workers' compensation, and we think there's a pretty good result on this one. The expiring premium with Liberty Mutual was $126,524. They came in with a premium of, was it $146,585? $146,585. They were looking for a significant increase. There has been a carrier, Midwest, who has been knocking on our door to get into your door for a few years. So we brought them in, and they provided a quote. The premium was $129,915. So it was extremely competitive. When Liberty Mutual was made aware of this, they actually reduced their premium by $10,000, which initially when we said, wow, that's a big increase, they came back with $1,000, which to me is like, why waste our time for $1,000? But anyway, so it was a total of $11,000. What Midwest also did was they provided an option for a 2-year deal. 2-year deals aren't common on most lines of insurance, with few exceptions, builder's risk and environmental policies. But what it does is it locks in your rate for 2 years. And then next year, the finance team doesn't have to deal with all the renewal issues. Now, could there be a problem and all of a sudden the rates start going down? That would be a nice problem. We don't think it's going to happen. But you could opt out. You would get a short rate penalty for the second year if you did do that, and that results in about 10% less than a pro rata cancellation. And of course, if we were going out to market, we would work that in just to make sure that you were actually saving money. but we don't think that's going to happen.
How do you compare, can I ask the question?
Sure, of course.
Liberty and Midwest, comparative cost, comparative of their performances.
So that's actually, that's a very good question, and we did discuss that within the renewal meetings. So workers' compensation, excess insurance sits over a $1 million retention. This is really for catastrophic claims. And the Midwest wouldn't be getting involved in the claims until exceeded $1 million. And at least they're not, very rarely, it happens, but very rarely do those claims exceed $1 million. So it's not really a service issue, but other policies, it could definitely be a service issue that you would want to consider. So just,
Yeah, if I may, is that is that per claim or per individual?
it's per claim.
Okay, thank you.
So overall, the workers' compensation is based on a rate against your payroll. Your payroll increased 5.5%, but your rate actually went down 2%. So that was a good result on that. Are there any questions on that, or would you like me to
You can move
on
on.
to the property?
You can move on.
Okay. So the property, obviously, is a pretty big ticket item for MDC. Your expiring premium was $651,000. The renewal premium was $703,494. This was marketed to other carriers. Travelers has been on it for quite some time. And carriers have trouble competing with them because they have, Travelers has money in the bank on it. So the rate, the actual rate against the total insured values increased 5.5%, which is actually pretty good when you go over and you see that the Northeast Regional average was 14.8%. That's rate, not premium rate. But the total insured value went up 2.46, so overall you have a premium increase of 8%, 8.1. So the next line, these are the casualty lines with Travelers. Travelers has a lot of lines with you. They do like this account. This is the excess general liability. And, Marnie, what's the retention on that? $250,000. The expiring premium was $264,880. It came in at $290,11, which was a 9.5% increase. The exposure increased 4.3%. They base their pricing off of your budget. The rate actually increased 5.2%. So if you look at the regional average,
Insured value, do you go through their explanation and comparison? Because home values were easy for people to estimate. Our its value, increase, decrease, is difficult. Do you consult any of our staff with values?
yes. So it's MDC staff that completes the information and provides the statement of values. But I will tell you, like, insurance companies have really been focusing on the insured values over the years because, we had a really rough spot with inflation. But it's important to know they want to see an increase, but you have a blanket limit. So they put all your limits together. So, say you have I don't know, what's the total insured value?
870.
800.
Yeah, okay, so you probably have a policy limit, I should know this, but I don't, of probably 750 million. So you have that amount for every loss. So carriers just want to see that you're making an effort to increase your values. Now, a couple of years ago, they were saying everyone, 4%, 6%. And now they're asking for, 5%. We're like, that's part of our negotiation. Well, no, it's gone up this much, in '22, this much in '23. Let's go a little easier in '24.
Dr. Martin Hoffman, GI liver specialist.
Thank you.
Okay, you're welcome. So we did the GL, correct? Yes. Okay, the excess auto, this one was a tougher line. And the retention on that, Marty, is? 250. It's 250,000, so for every claim, you assume $250,000. This one, the exposure, which is based on the unit count of your fleet, went up 8.42%. So right there, you're kind of expecting your premium to increase 8.42%. But in addition to that, Travelers was looking for rate, and the rate went up 8.86%. So you can see that there's a premium increase of 17.3%. Now that is a big number. We did check, we talked to Diana and Neff and found out that MDC is actually retaining their vehicles. So before they'd buy one, and then turn one in, but now they're maintaining, and there were additional vehicles. And in addition to that, auto's in a pretty tough place. We all know it, it's an issue, not for MDC, but for everyone who has a fleet. There's a large increase in losses for distracted driving. So carriers are looking for rate on that. The next line, not a big ticket item, is the crime. So you have $1 million limit for crime. The vast majority of those are really for employee theft. The premium was $5,388. This year it's $5,492. The employee count increased 2.1%, the premium 1%. So really it's kind of a reduction in rate, but small numbers.
Just curious question. How do they compare crime rate and how they increase the premium? Can you explain?
Yeah, so crime insurance is, the exposure base is employee count, because although people don't like to hear this, I bet 95, maybe 99% of all crime claims are committed by employees. So as your employee count goes up, your rate is assigned against that employee count.
Repeat it, please.
Pardon me?
Repeat it.
Okay, so your employee count is the exposure base. So if your employee count goes up 5%, you can expect your rate to go up 5%, your premium to go up 5% at a minimum, plus the increase in your rate. In this situation, there was no increase in rate.
But how do they compare crime? If crime is going up, stealing is going up.
Oh, are you talking about the regional average?
Yes.
Yeah, okay. So basically, the Northeast regional average is based on Gallagher, the company we work for, the insurance premiums of their clients in the Northeast. It's a pretty flat number. And Gallagher is large enough that their data is credible. It's not like they have 100 clients in, the Northeast. It's much, much more.
I just wanted to know explain the process, how they estimate and relationship with crime and which crime are they computing?
So what type of crime? It's like, it's employee theft. That's the most popular one, like I said. So, an employee has access to checks and they're writing themselves checks. Probably the most common one. They have credit cards. They have access to bank accounts. It's not like crime, like violent crime. It's like loss of funds to MDC, loss of monies. Did that help you understand?
I understand now you are talking about thefts by employees on any cash transaction
Yeah.
or etc. But if automatically it goes up whether our record is there or not. Record is not there. Did MDC employees commit more crime than previous year?
Oh, you have none
Pardon?
that I'm aware of. There have been no losses.
Okay. So then why did premium go up? Penny.
Yeah, so the premium went up from about $104, but your employee count went up 2.1%. So it really equates to the number of employees going up. That's what they do. They have a rate and they times it up from the number of employees.
I cannot argue with industry because that's where the problem is, and you cannot solve, I cannot solve, MDC cannot solve. But let's go ahead. Thank you.
Yeah, we try. We try. Okay, so the next one, okay, the fiduciary, that one is based on the assets in your plan for pensions, retirements. Fiduciaries can be held personally responsible, so it's an important coverage. The assets, to the fiduciaries, I should say, but the assets went up 12.3%, and the premium change went up 4.9%. So that was a good result. It was actually a reduction in rate. The next one is the public officials. We thought this was a great result. We were pretty pleased with it. Public officials, like fiduciaries, they can be held personally responsible, so it's an important cover. There's a $5 million limit. Since we've been your broker, you've had a retention of $500,000, and that was the result of Chubb imposing a higher retention, which means the amount you pay per claim before the insurance company kicks in. So they did that because there were claims, there was a history, there was a few tough years. And we've been talking that, once we have like a clean 5 years, that's when we go out to market. And the result was it was good. Chubb had come back with an increase in premium. And Marnie, I'm going to ask you what that is because it's too small for me to read here.
So Chubb originally quoted $158,199 with a $500,000 retention.
Yeah,
Yeah, and then they reduced it to $139,324 with a $100,000 retention when we achieved the competition with AIG.
yeah, because they didn't want to lose it. Now, basically, Chubb to date, because of those prior claims, have not made a profit on this account. So now we have AIG coming in, who knows your history because they were your carrier before, but they are kind of excited to see how your history has changed. They came in with options for retentions of $100,000, $250,000, and $500,000, which was fantastic right there. But the $100,000 retention came in at 80,750. That's a big drop. So we got Chubb down to 139,524 with a $100,000 retention. They also dropped their retention to compete with AIG. But there's still quite a difference there. We did a very close comparison of the coverage terms and conditions. There were a couple areas where AIG was a little deficient. I'm going to tell you, they weren't even critical areas, and they agreed to increase it to match Chubb. So, and it's important to know, too, that that retention applies to every claim. So in one claim, instead of paying $500,000, you'll be paying $100,000. If there was multiple claims, and hopefully there aren't, I know you don't want them, the same thing would happen. So that can be a very, very significant cost savings, not to mention that the premium is, 40% less. And, Chubb is, initially, they wanted more and they were trying to explain it. But they do want to keep the business, but, that's a lot. So we're recommending AIG on that. And that also, just so you know, public officials include your employment practices liability. And for any organization, that's where most of the claims come in.
Any questions on that? Yes.
Yeah, on the property insurance, which is just for property only, no liability, anybody getting hurt. We have $870 million worth of property that we insure, like what happens on a reservoir? I mean, if the reservoir collapsed, would they pay that? The tunnel collapsed, would they pay that? I'm just curious. I can see, we burned a building down for it, but.
Yeah.
So if we had
Real property.
real property, so we have $870 million on real property, not counting all the land and stuff?
I would say that's more.
Or,
But yeah,
Again, not land, just buildings. $870 million worth of buildings we have here?
Yeah.
Okay.
Down in the South Meadows.
Yeah.
What?
South Meadows.
the wastewater treatment plants.
Yeah, look at
yeah,
all the
wastewater,
treatment
yeah.
plants.
So looking behind, down there's close to $1 billion worth of buildings and equipment, really? Okay, good.
Yeah, it's a pretty extensive statement of values locations.
Say, that seems like-
We've already spent $600 million on the Hartford treatment plant in improvements, just $600 million in improvements. Never mind the pump station, the tunnel.
Okay.
Anyone else? Okay, keep
All right.
going.
So the next line after the public officials is the cyber. The cyber market has changed drastically over the last year or two. A few years ago, people were having trouble getting cyber insurance unless they had the appropriate protocols in place. The underwriting was very technical, very strict. But recently, more carriers have come into the market, and the capacity has increased. We did an extensive marketing on the cyber. You have been with Cowbell for the last few years, and they still came in as the top contender. They were the most competitive, and their form is good. So there's looking like a 3% increase regionally, and yours was essentially, it was flat.
Excuse me. I think that with regard to the cyber liability, this is really a real compliment to our staff.
It is, it is.
And basically the level of sophistication. I think that, quite frankly, you have to view our folks as being the poster children in this particular area.
And you
Are
said
not-
it more directly than I was trying to say it when I said unless you had all the protocol in place, which you did, so you've never been without it.
Through you, Mr. Chairman,
Yes.
to our CFO. And did we have any incident on a cyber?
No, there's been numerous incidents across the country. And I think when Bob Schwam was here, we did a little presentation. When he did that presentation, he talked about a number of situations that are occurring across the country. We are heavily engaged in cybersecurity training. We're looked at as one of the leaders in the industry, even with the state of Connecticut, Homeland Security. So, no, we have not. And but the reason why you're only paying $16,000 is because we're spending $30 million over the next 5 years. So, 16,000, 30 million. But you have to invest in your infrastructure, and IT equipment doesn't wear out. It's just that over a short period of time, 3 to 5 years, they figure out how your encryption, they can, so IT servers will run forever. It's just that they'll figure out how to get through the encryption. So that's why you're constantly having to upgrade your
I'm not
equipment.
questioning why we have it. Understand that necessity.
Yes, absolutely.
Only I was inquiring about whether or not we had any incidents and what type and how.
Yeah.
Thank you.
Bob is on.
I am on the call, Scott, if anyone has any questions.
I think we're good. Thank you, Bob. Yeah.
Ready to go on?
Yes.
So the next one was the excess police professional. That's coverage, it's in addition to the excess general liability, because it's not covered in your umbrella program, and that was a flat premium. There was no change at all. The next grouping, I'm going to speak of it all together, and this is your umbrella and your excess program. Now, the umbrella policy sits over your general liability, and it sits over your auto. So you can see here, there's a total of $50 million. So in any general liability suit claim, any auto liability claim, you have $50 million of limit. So this year, it was a little difficult. Travelers came in and they write $5 million ex of their program. And last year we had 5 layers, but now carriers are coming back and saying they only want to put out a capacity of 5 million. So we had to restructure the program. Another carrier in here, Great American, came in at the last minute and said, we want to cut from 15 million to 5 million, which means we would have had to fill out 10, which isn't really easy to do. But Marnie always seems to get it done. But then they were taking out the failure to supply coverage. Then there was a new underwriter, new thoughts. That underwriter said, all right, I'm going to give you 10 million with the failure to supply. So then we only had to fill in that $5 million gap. But in the end, the total program for the 50 million came in at 565,749. Oh, no, that was expiring. Excuse me, the renewal was 625,630. So it was a 10.6% increase in premium for that program. Now, that program is based on the underlying, so the increase in the GL, the increase in the auto, that all goes into that increase as well. So the overall change for umbrella in the Northeast region is 10%, but that doesn't take into account the 8% increase in the fleet or the increase in the budget.
Any questions?
This little more explanation on that category. Travelers quote and other companies.
I'm sorry, I couldn't hear you.
Can you explain little more in detail travelers quote versus other companies' quotes?
So the traveler's quote for the umbrella?
Yeah.
Okay, so that's the primary. So that was 5 million, excess of the 1 million above in the GL and the auto. Then the next carriers, what happens is you're coming into, it was another 5 for Genesis with 118,460. Is that what you're asking?
Explain me why everybody is coming up with different numbers of coverages.
Yeah. So basically what is happening here, every carrier, the underwriting is subjective. You can see as the layers get higher after Genesis, the premiums typically go down, except for AWAC because they were offering more limit, because they're further away from the risk. So you're more likely to have a $10 million claim than you are to have a $50 million claim. So the premium is lower. And it's all different carriers. Underwriting is subjective as long as they follow certain, protocols based on their underwriting manuals.
Don't we define how much we want versus we allow insurance companies to come up with, give us all different numbers and confuse? An excess liability?
If I may.
Yeah, go ahead.
I think, Commissioner, and Ronnie, correct me if I'm wrong, but I think you cannot find an insurance company that's going to give you $50 million. So they break it up into pieces and share the wealth, right?
Yeah.
Sharing the risk amongst multiple insurance carriers. Is that correct?
That is correct. Most excess and umbrella carriers now just want to put out $5 million.
And given the fact, Commissioner, as we talked about with the magnitude of property we have and vehicles we have, we talked about, our treatment plant's worth
My question,
$5 billion, not,
my question was, do we decide on our own, based on our judgment, that we want 5 million excess liability, period? And why do we allow other insurance companies to come up and give this marketing? We give you 15, 20, etc., with different cost comparison.
So I think we go through this, probably not in the last couple of years, but over the years, we're looking at what's reasonable. Do we need that insurance for that, whatever that is? Because what's the practical side of how much money do we need to deal with a certain catastrophic event? And then we weigh, if you wanted 100 million, it would cost you a lot of money. And what's the practical side of 100 million? So we've gone through that exercise over the years, and we probably should do that again to see, what our real risk is. I mean, God forbid, one of our dams failed, you would have massive property loss along the watershed towns and property damage. So well in excess of 50 million. But is that practical? Is that reasonable? Is that really going to happen? You could insure yourselves as far as you want, but is it reasonable? And but I think maybe we should look at over the years we did this, but look at how much money would it cost us to actually increase that up to a higher level?
This is the information. Now, ultimately, you will make a decision.
Yes,
Which one, okay.
correct.
So Scott, the kind of from a broker perspective, I look at it, you can never have enough umbrella, right? Because you never know what's going to happen. But then it's got to be what's reasonable, what you can afford to pay, and that's what it comes down to.
Right. In one of the, I asked this question earlier, we're paying about $17,000, sorry, for failure to supply. So what does that mean? Failure to supply. You can't supply water to people because we have a water main break. Well, practically have water main breaks all the time. And practically we get that water back up and running in less than 4 hours on average. We've had significant breaks where it take us 2 days, but we don't really, we don't ever expect to be in a situation where we couldn't provide water for a week or a month. And so $17,000 is a reasonable, trying to insure ourselves for that scenario, we couldn't afford it, right? And practically we don't need it.
Climate change and whatever is occurring elsewhere. Our area, particularly where we are, our plants, and we have a problem with dikes. Looking at that, do you think you want to look at this from that perspective? What could happen?
We're doing that. Excuse me if you don't mind. We raised that in our meeting earlier, and basically that was discussed in our earlier meeting, and that is an area that is going to be explored by our consultants. So I think the combination of staff and commissioners jointly raised this, and that is going to be examined.
Thank you.
So overall, we have a total premium increase of 5.1. Is that it, Marnie?
Yes.
Yeah, with a regional average of 10%.
Perhaps something that we should discuss here. This basically is a presentation that, I guess, for a lack of a better term or phrase, sort of represents the upper limit in terms of what we think currently the premiums are going to be and what the increases are going to be. That does not mean that that's the final say in this, because you're going to be out working people and basically try to firm up the numbers. But this is basically your view in terms of what the top side is.
Yes,
So that
we
once-
have this all in writing.
Yeah.
They're not indications, they're actual firm quotes that are good for 30 or 60 days. So we will go back and see if we can do better. Never hurts to ask.
And then you will then come back to us to, I guess at some point, to give us the final numbers, but what we're going, first of all, do we have a quorum?
We do have a quorum.
All right, okay. So since we have a quorum, we can then approve this, which gives you essentially operating parameters in terms of what the upside is. You will then basically go back, negotiate, close this out, and then come back to us so that in effect, we will know what the final numbers are. So that in effect, I guess, since we're going to be doing the budget, this will be built into the budget. Is that correct? Okay, all right.
Yes.
Yeah, okay.
Mr. Chairman,
Yes.
if I might, thank you, Mr. Chairman. Chris Stone, two things. when you come back, it'll be more of a notice to the PPI committee as to where you ended up, right?
Yep.
At this level or somewhere below that. But that's one. Two, on the workers' comp policy, did you explain that that's a two-year policy, two-year term?
I think I did, but maybe I didn't.
Did you? Okay,
You did.
that's
Yeah,
fine.
Yeah,
It's
it's
not
a
reflected.
two-year deal,
That's fine.
rate lock.
It's not reflected in the chart.
Oh, and you know, I didn't go through, I was looking at, I'm a numbers person, but just all the information that I talked about is on the additional slides by line of coverage.
I get that.
Yeah.
But we're gonna have to, on the resolution I looked at, John, we're gonna have to, this, for everyone else, this is a one-year premium from now until next October 2000. As to workers' comp, and we should probably have an amendment, Mr. Chairman, if you don't mind, a friendly amendment, but that'll be a two-year.
Yeah.
Okay.
Mr. Chairman?
Thank you, Mr. Chairman. Commissioner Curry, with your permission, I move we approve the insurance coverage and limits as presented, with the caveat that certainly negotiations are ongoing, and we would hope that you would come back with some numbers that are even better than what's presented today.
But do we also need within that action, we need to indicate that the workman's compensation premium is a two-year transaction as opposed to everything else, which is basically a one-year transaction. Is that correct?
I don't think we do because my motion was as presented, so
Oh, okay.
it was presented as a two-year term.
Mr. Chairman.
Oh, I see, but based on the resolution presented.
Yeah, there's a
Okay, yeah.
resolution that was prepared.
Okay, sorry.
In advance, which is, mirrors the language that you just said, Mr. Chairman. So I guess to council's point,
On the amendment to.
I would propose an amendment at the end of it, another further resolved paragraph. The workers' compensation policy, including the attached document, is for a two-year term.
At the annual rate set forth, it's just so we're clear.
But if I may, this happens all the time, so we have contracts, three-year contracts. We're not budgeting for the 2 years in this year, right? We're only budgeting for 1 year. And,
You okay with that?
I'll second that.
Second? We have a second?
Second.
Okay. Is any discussion? Amendments? All those in favor?
Aye.
Opposed?
Aye.
Any abstentions? Passes.
Thank you, Ronnie.
Thank you, everyone, and thanks for partnering with us for another year. We appreciate it.
no problem.
Item 5, and then we can go back to the minutes. Report on the prior month's retirements, resignations, terminations, including employee years of service, gender, race, and classification.
Good evening, Commissioners. Jamie Harlow from Human Resources. The month of August of 2024, we had one new hire. I was asked at the last meeting to identify if it was what type of posting it was. It was an open posting, meaning it was internal and external candidates. In terms of promotions, we had 2 internal promotions, one of which was done through an open posting process, which looked at, again, internal and external candidates. One was internal candidates only, and then we did not have any retirements. We had 1 resignation and no terminations.
Okay. Any questions?
Sure.
Sure.
Jamie, would you like to introduce Michael Moore? He's our new comptroller. We'll introduce him at a Board of Finance as well and the full board, but I don't know if Jamie or Kelly wants to introduce Mike.
I'll let Kelly introduce him.
Okay, great.
Okay.
Good afternoon, Commissioners. Kelly Shane, Chief Administrative Officer. I want to introduce Michael Moore. He joined us this week as our new controller. He will be in charge of both our budget group as well as our financial controls group in the finance department. He's joined us most recently from Bob's Discount Furniture, where he was the Senior Director of Finance. I don't know if you knew this, but they have over 200 stores across the country. Did not know that. I thought it was regional here in New England until we met Mike. Before that, he was with Pfizer as the senior manager of finance there, as one of the senior managers of finance there. And then before that at UTC, interestingly, all SAP shops. I was very happy to hear that. So he has a lot of experience with SAP, and we're very happy to have him here. Bob could not be here today, but I'm happy to introduce him. So we'll learn more about Mike, but I'm happy to have him here.
And one more interesting fact, Kelly.
Yes.
He is a mechanical engineer.
Oh, well, I didn't want to blow that. I
Just
thought
wanna
you would
say.
want to share that. He started as a mechanical engineer, but made his way to finance somehow because that's where the magic actually happens, right?
There you go.
Thank you.
So as the PPI approved, as PPI approved in the last few meetings, so now we used to have a manager of accounting, quote, manager, comptroller, and we had manager of budget. Now we have comptroller, which is overseeing both the budget side and the accounting side, and Mike will be in charge of that group, and Sharice is our new assistant manager of budget, and the assistant manager of comptroller is yet to be filled.
Correct.
So we're working on that.
Yeah. We'll let Mike make that decision when he's acclimated.
Yes.
Thank you.
Welcome,
Question on
Mike.
the screen now.
Oh,
Buddy?
Mr. Chairman?
Yes.
Yeah. Oh, okay, thank you. I'm sorry. I'm sorry I didn't, I didn't want to interrupt the introduction and everything, but I did have a question on the retirements, resignations, and terminations. I believe that I heard him say that there was one resignation. And can Jamie maybe or someone explain what that was? Was that a long-term employee, a short-term employee? And just let us know why it's not a retirement; it's a resignation. So you don't have to tell me. I'm not asking who. I'm just asking. What the
Yes.
what the resignation was about.
Good evening again, Commissioner. Jamie Harlow. The resignation was a short-term employee, less than 2 years.
What was the position, Jamie? Was it
It was on the business side. I'm trying to
Okay,
be
so is it-
protective at this point in terms of, identifiable information.
I
But I
understand,
want
I
to be
understand.
respectful and share the information that you need. So it was an exempt and excluded employee on the business side.
And it was it was not a bargaining unit position.
Correct.
So is that's so? And is that position now advertised, now open, advertised? Are we looking to fill it again, or just curious?
Yes, it is a posted vacant position that we are recruiting for.
Okay, all right. Thank you.
Thank you.
Appreciate that.
I'd like to go back to the minutes. However, before we deal with that, I have a question just for my own clarification. What we approved and the way this thing is going to operate is that our HR people are going to provide the information to Amazing Workplace. They are then going to take that and, in effect, distribute the survey to our employees and staff. Those will be returned to them. They will do the appropriate tabulations. And then the results will then be provided to our staff for basically review and discussion or what have you. But I just want to make sure that that is the understanding that we have in terms of how this is going to operate.
Thank you.
I mean, is that that capture the essence of what the understanding is, before we move forward with this?
Chairman?
Yes.
Yeah, I think that our last meeting, the minutes weren't clear. Certainly, audio tapes were clear in response to the series of questions I asked the amazing, whatever it's called. But in addition to that, I'm going to sign a letter tonight or tomorrow that will be going out to all employees, whether it be email or direct, clarifying what you just said and the fact that MDC will be providing the necessary information, and everything else will go through the vendor, and then they'll compile all the information and come back with the final findings to us, that we will absolutely not be involved or have privy or any information regarding to individual responses to questions on the survey.
I think this is, I just think this is important, and, once again, this is not, we're not out to get anyone. We just basically want to give our people, because they've gone through a number of changes, an opportunity to express their views or concerns in terms of whether or not we've got an environment where they can, operate and develop and perform to the best of their ability. And I think that that's critical. And if people don't respond, I think that shame on you, because it is basically, once again, giving you an opportunity to voice your concerns, if any. Because basically, we've got a lot of things that we need to work on here, and we just want to make sure that everybody is on board and we're in agreement. If we got any issues, hopefully we can deal with them, but we want to move forward. So unless anyone has any other comments or concerns, I will entertain a motion to approval of the meeting minutes of August 26, 2024.
So moved.
Do I have a second?
Second.
Second.
All those in favor?
Aye.
Aye.
Opposed? Any abstentions? Passes. Thank you very much. Opportunity for general public comments? Once again, opportunity for general public comments. Commissioner requests for future agenda items.
Mr. Chairman.
Yes, sir, Commissioner
This is
Salemi.
Commissioner Salemi.
Yes.
Yep, thank you. Request for a future agenda item. Would like to for the PP&I to review an opportunity to establish a budget item for Independent Labor Council. I asked if we could get an estimate for that, and I think we're going to need a vote to do it. So I'll just ask to put it on the agenda, and we can discuss it then.
Okay.
The next meeting.
Anyone else? Any other items? I have one, and that is, I think that we need to discuss and make a final decision with regards, well, the management study and the form that would take. Are there any other?
Say that again, Ellen.
The management study. Yes.
Different from the climate study?
Yes. Yeah.
Okay. May I comment?
Sure.
And while I don't disagree with you, I think that the findings in the climate study will certainly give us some direction in how we proceed. So I would suggest we wait until that's completed, and then we can, it'll help us determine what direction we might move in from that point.
Good point.
All right,
Duly
Mr.
noted.
Chairman. Yep,
Mr. Salemi?
Chairman. Thank you. I'm not certainly not going to disagree with the chairman. But the only issue is I did bring up the management. Well, we've gone ahead with the climate study, so I assume that the budget that we appropriated is going to cover the cost as it is. We did approve, a budget for a management study, and if we don't, I think that because we're coming up on the end of the year, certainly the end of the budget year. That's the only reason I did ask that we consider that if we don't make a decision on it by the end of the year, that we at least have a budget item established. If we do make a decision, we don't need it. If we don't, we establish the same budget item again. That's the only suggestion. I'm not saying we do that now. I'm just suggesting that when we discuss that, we can keep it in mind. I believe we appropriated $50,000 for a management study in the current budget.
Mr. Curry?
Thank you. Commissioner Slimmy, so you're suggesting, and I think rightfully so, that if we don't move in and between now and the next few months, which would be hard to do anyway, I think, that the proposed budget coming up for 2025 would include those funds for a management study.
Yeah, since it was approved, we just haven't gotten around to making a decision on, how we want to do it or whatever. I just don't want to lose the opportunity because we don't have the budget there. I understand why you want to wait, and I think it's a good idea. I'm just suggesting that we don't want to have the option closed out because there's no budget for it. So.
Thank you.
Anyone else? I will entertain the appropriate motion.
One request I have.
Yes.
You have a soft voice. Many times with my hearing aids, no matter I go to the max, I cannot hear you.
Okay.
So you may have to
I will shout.
get some system improvements. So when certain people, including me.
Okay, I will lean in, all right?
Thank you.
Is that better? Okay.
Everybody, including me.
If there are no other concerns or comments, I will entertain the appropriate motion to adjourn.
So
Thank
moved.
you.